Hey everyone, Logan Hertz with Hazeltine LLC. I have with me, as usual, Peter Nelson of Nelson Insurance Advisors. Peter, how you doing?
Living the dream, Logan, living the dream.
So today, I thought we'd talk a little bit about something that I'm starting to see more and more, which is trying to appreciate more the intangible, non-quantifiable benefits of infinite banking, of whole life insurance, but just more generally talking about the psychological aspect of finance, right? Financial fitness is like physical fitness. There's a huge psychological component to it. And when people obsess over numbers and trying to just build this big nest egg, there's a lot wrong with that from a framework perspective. But also it ignores probably the biggest piece, the biggest reason that people either become financially independent or doesn't. Probably the biggest reason is psychological, right? So that's a huge topic, obviously, but I thought today we'd talk about one thing, one aspect of it, which is the psychological benefit of having certainty in your financial plan, right? And how that helps you in so many ways. So, Peter, what do you think about that?
Right. It's what I always say is we provide certainty in an uncertain world, right? I mean, right now, just think about it. We have, the government racking up huge amounts of debt. We have a presidential election that we believe is going to be very contested. I don't know if you saw, but there was just a tanker that was blown up by the Houthi rebels. They said it was like 4 times the size of the Exxon Valdez spill. I mean, so there's a lot of things going on in the world, but the cool part about cash value life insurance is that your values always go up, no matter what's going on, right? I mean, your values go up, and to me, it's why I do a lot of my saving in a cash value life insurance, multiple policies. It's because I don't have to worry about what's going on, right?
Yeah, there's certainty about a lot of things in whole life. First of all, the certainty that your cash value goes up no matter what, at least a certain rate, because it's guaranteed. There's the certainty of it being tax free, income tax free, right? So we don't need to worry about where our tax rate's going. What are the tax rates going to be? We don't have to worry about that. The certainty that that death benefit will be paid. Because unlike term, a whole life insurance policy is in force for your whole life. So you know that death benefit will be paid. The certainty that that death benefit can be used in the event of long-term care, right? So that death benefit is super important because this is what we mean as part of the certainty that this is a self-completing plan, right? When you start a financial plan that's investment based, okay, and there's nothing wrong with investments. It's just the outcome is uncertain. Maybe your goal is to build up $1 million nest egg, but you don't know if you're going to get there or not, right? You certainly don't know how quickly you're going to get there, right? If you start building cash value in a whole life insurance policy and it has $1 million death benefit, you know you are going to get there, dead or alive, no matter what happens, right?
Right. And, one thing we both like to talk about is even that permission slip, right? Having a permission slip to spend the majority of your money while you're alive, and the minute that you die, the death benefit will actually replenish all that money that you use while you're alive, so that the people that took care of you could be taken care of as well. Gosh, isn't that an amazing, strategy? And doesn't that provide that certainty that unfortunately I think a lot of Americans don't have?
Yeah, it really enables you to make much better financial decisions. So this kind of bleeds into how whole life makes all your other financial assets better, is having the certainty that whole life provides allows you to approach every other aspect of your financial life a lot better because you have that peace of mind. You have that bedrock asset. There are multiple things that you're not worried about anymore. And having that peace of mind now enables you to do everything else with more confidence and make the right decisions, not get lost in emotions, which is easy for us to do, right? We all make emotional decisions. And to quote someone in the business, I believe he said, I know there may be a recession going on, but I refuse to participate.
Right.
Right. And that's kind of what whole life insurance allows you to do, right? So many people are worried about what quote unquote the market, which is not a market, the S&P 500 is doing, right? We don't have to worry about that. Not worried,
Yeah,
right?
it's a non-correlated asset class. And I go back to the Ernst& Young report, and wasn't really in the Ernst and Young report, but once again, having that non-correlated asset class in your overall portfolio can be a big deal. We just had made a video a little while ago talking about, we quoted Dr. Wade Fowle, right? Using cash value life insurance as a volatility buffer, right?
Hmm. Hmm.
I mean, that's going to allow your
Peter,
portfolio.
surely you're not suggesting there's volatility.
Oh my gosh, there's all, look at, it was August 5th. I have it, I'm looking right now. August 5th, the VIX went through the roof. The volatility index went through the roof.
Yeah,
And we
yeah,
anticipate,
right.
let's face it.
And so, look, if you want to play the market, that's fine. Whole life insurance puts you in a position to play the market better, right? Because you have this foundational asset. You have that cash value available to you to take advantage of market downturns. And now you can afford to be more peaceful and not to get caught up in the emotions. Because again, it's easy to sit there and say, yep, I'm going to put money into the market. And I know the market's going to crash at some point. It's going to go up, it's going to go down, but I'm not worried about that. I'm thinking long term. Okay, it's easy to say that, right? But then when these things actually start happening, that creates emotional instability, right? And it's not just uncertainty about where the S&P 500 is going. As we mentioned, there's so many other things uncertain, like, are you going to get sick? Are you going to die? Will you lose your job? Where will tax rates be? Right? Um, and not to say any of these things, I'm not trying to be a fear monger. All these things might turn out great, right? It's removing one more variable from the equation for you. Having more certainty is a good thing, right?
Yeah,
So
I
now
mean,
it's one less thing to worry about, right?
I'm known to actually say, look at somebody and I say, look, I hope that this is the worst thing you ever, that this cash value life insurance policy is the worst thing that you ever do. Because doesn't that, because doesn't that mean that the government was able to fix all the bad stuff that's coming down the road? But what if it's not the worst thing you've ever done? And what if you could take advantage of every single government, Wall Street, and bank screw up for the rest of your life? What's that worth to you? Right? People are like, they're always stunned. They're like, I had never had anybody actually say, I hope this is the worst thing that you ever buy. We're not used to that because sometimes I think we try to, oh, it's so amazing and this, blah, blah, blah. No, it's certainty.
Yeah, I think you're right. It's a natural tendency. We tend to oversell it, right? And not that any things we're saying are wrong. It's just people don't respond well to that. Whereas when we undersell it, you know, then I think people start to more easily grasp the benefits of it. But to your point, Peter, I think one of the reasons why we oversell it is because we're trying to sell it using the same framework that Wall Street does, talking about things like return on investment, which that's not the right metric, right? And so much of what makes this such a great asset is the psychological benefits, which obviously really can't be expressed in numbers on a page, right?
Yeah, I had one client, he's one of my best clients, and he looked at me and he goes, Pete, you have undersold this to me. He literally said this to me. You've undersold this so much. He goes, I don't think you got to go that far. I was like, look, I want to show you what probably the worst case is here so that, you know, it'll probably do a lot better. Yes, you're right. But I just want you to see, yeah, this is what it could do so that you're not mad at me later on. Because if you're going to buy it at the worst case scenario, then anything better than that's all gravy, right? He was like, yeah.
Yep. We had this kind of mini crash recently. I had a client text me and say, hey, my cash value life insurance is the best performing asset in my portfolio. It's totally unaffected, right?
Yeah,
Um,
and I think that's where, without talking about investments too much, I think that's where cash value life insurance is an amazing bond substitute. I'm not saying you have to replace all of your bonds, but if you just take a chunk of your bonds out of that portfolio and move it from your left pocket and move it over to your right pocket into a cash value life insurance policy, because even with bonds, you still have that market risk and you have that interest rate risk where you're transferring the risk from the bonds to you, which is you really the risk to the insurance company, who, by the way, is one of the biggest asset managers in the country as an industry as a whole. And once again, going back to that's certainty then, right?
yeah, yeah. I think there are a lot of people out there where, let's say, cash value life insurance didn't exist. It just, you couldn't buy it, right? It wasn't a thing. Um, I think still those, a lot of those people would just put their money into, say, a savings account, right? Some kind of a safe vehicle where you just, your values, your cash is growing, and you have that certainty. And I think they'll end up doing better, even though in theory you could get a better return in the market. Yeah, I mean, everybody knows that. Okay, of course, you're not going to get 15% returns in a savings account, generally speaking, right? But if you do that, now there are so many other things you have to be concerned with, right? And again, we're not against that at all. If you want to do that, that's fine. I think you'll be to the point of whole life insurance making all your other assets better. I think you'll be in a better position to do that if you have the bedrock of cash value life insurance, knowing you can fall back on this, right? It's a volatility buffer. So while the market is down, you have cash available to you to weather that storm and to take advantage of those downdrafts in the market, right?
Yeah, absolutely. There's so many cool features with cash value life insurance, and why I do believe every single American, if they can qualify for it, they should have a portion. Ernst& Young, going back to that report, they said it was 30%. Now, maybe for you, you disagree, and maybe it's not going to be 30%. Okay, maybe it's 10%, right? We talk about right now, gold is a very big topic. I'm a big fan of it. I have a lot of clients, they have 10 to 20% of their portfolios in gold, for example, or gold mining stocks or something like that. Why would you not have maybe 10 to 20% of your overall portfolio in cash value life insurance, knowing that it's not correlated to what the markets do? I think it's kind of a no-brainer.
Well, and to quote someone in the industry, whole life insurance is an and asset. It's not an or asset, right? So if I want to invest in, let's say, gold mining stocks where there's risk to the downside,
A lot of risk.
I don't have, it's not an either or scenario. It's not either I put my money in whole life insurance or I put that same money into gold mining stocks. No, what you can do is you can take the money you've allocated for the investment, pay it as a premium into your whole life insurance policy, then take out a policy loan and finance the purchase of that investment. Now you've had that same dollar working for you twice. It's working for you inside your whole life insurance policy, and it's working for you inside that gold mining stock, hopefully going up, right? So, that's one of the, that could be we're going down a rabbit hole because that's a whole nother topic of conversation, right? The reason why people are so obsessed with things like rates of return is because they believe they can only use every dollar once, right? And so they're looking at the portfolio, right, as you say, which is a word I try to avoid because that's just, well, where's my money sitting? But I don't want my money to sit. I want to put my money in motion. I want to create cash flow, right? And running my money through cash value life insurance is one of the first steps towards really creating that cash flow because now all your money is in motion all the time, right? Because all that money is working for you inside your policy and doing whatever else it's doing for you, right? So, but of course, we were trying to talk about certainty, and again, it's one of these things that I want people to think about because it's so you can't put a number to that,
No,
right?
you absolutely cannot. And we're going in this country right now. I mean, most of my clients would agree that they're concerned about the future of the country and what's going on. And this provides certainty, once again, in an uncertain world. And so I always like to ask people, what percent of your overall portfolio or savings plan or whatever would you want to have in something like this that you'd be guaranteed to never lose any money, but at the same time have access to that money so you could take advantage of all this bad stuff? Would you rather be harmed by the bad stuff or take advantage of it? And they always say, we want to take advantage of it. Well, that's a cash value life insurance policy. When do you want to get started? Before or after the bad stuff happens?
Right. There's the certainty that your cash value is always going up. There's the certainty that it will be income tax free, right? There's the certainty that your plan will complete because there's the certainty that that death benefit will be paid. When I start this savings plan, it is a plan that self completes. It will be completed. there's the certainty that as you approach retirement, long-term care becomes a huge issue, right? There's the certainty that I can use that death benefit should I have a long-term care need, or should I have a terminal illness, or in some cases, even a critical illness, right? So it
Right.
provides so much peace of mind, right? If you have the right permanent death benefit structured and the policy structured in the right way, then now it allows you to approach all the other aspects of your financial plan with a lot more certainty and a lot more ability to execute. Because in theory, you could execute on all these other financial plans, but in practice, it's going to be a lot easier if you know you have this bedrock asset, this anchor that's backstopping everything else, right?
Yeah. I mean, absolutely. I kind of think it's a no-brainer. And you talk even about long-term care, where we know that 90% of all Americans pretty much don't have a long-term care strategy out there outside of either the government plan or just spending down their assets, right?
Mhm.
And so there you go. And even if you don't have a policy, a cash value life insurance policy that comes with a chronic illness rider or something like that, even the leveraged death benefit can be a big deal, right? Because let's just hypothetically say you got 100,000 in cash value and you got a $200,000 death benefit. And let's just hypothetically they say they go into the home for 1 year and they spend 85 grand, right? Well, the minute they die, the death benefit would literally replenish all that money they used for that long-term care issue. I mean, think about it. That's as basic. You don't need no riders or anything like that. It's that leveraged death benefit. If you got 100,000 cash, 200,000 face amount death benefit, you figured out a way to find an extra $100,000 that you didn't even know existed. And
Yeah,
that's just basic cash value life insurance principles. And I don't think we talk about that right there enough. That leveraged death benefit.
I love that phrase, the leveraged death benefit. Maybe that can be the topic of one of our future videos, the power of leverage. Yeah, that leveraged death benefit. Here you're not taking on debt to get leverage. You're not taking on risk to get leverage. It's the opposite. We have that leveraged death benefit. And to your point, that's just the vanilla whole life insurance. Like all whole life insurance comes with a leveraged death benefit, whether it's
Right.
participating or not, whether it's designed for infinite banking or not. That leveraged death benefit is the key, is the that underlies all of it, all these other strategies, and it's
Yeah.
powerful.
And we've talked about this and we can wrap up, but then they try to say, well, you don't get to keep the cash value and the death benefit, right? And I always say, I compare it right away. Okay, you got two savings accounts. You got a savings account, you got a cash value life insurance policy. They both got $100,000 in them. You die. How much do you get for that's in that savings account? And they go, well, I get $100,000. Very good. Okay. Cash value life insurance, you got $100,000 of cash value with a $200,000 death benefit. How much do you get? 200,000. So that's a lot better deal, right? I always say the biggest ripoff is a savings account because there's no leveraged death benefit. But then they want to turn it around and try to say, oh, yeah, that's a ripoff. You don't get to keep both. No, that is not the way it works. Your savings account doesn't have a leveraged death benefit, right?
Right. I've never understood that objection because I mean, it's just, first of all, as we know, it's a misunderstanding, but also the death benefit's always more than the cash value. And like by looking at it, I don't see how anyone would reach the conclusion that anyone ever promised to give you the death benefit plus more. It's the death benefit. Like what's so hard to understand about that? And yeah, to your point, if I get more, why is that a bad thing? I don't understand.
Yeah.
Right.
Because and I think they're trying to compare, once again, they're trying to compare it to an investment, right? And it's really, we don't compare it to an investment. I always say it's the greatest savings vehicle ever invented by the human mind. Okay. But they need to compare it to an investment because that's the only shot that they have of tearing it up. Because, oh, it's a horrible investment. No, it's not an investment. Never has been, never will be. If anybody tries to sell it as an investment, I give you permission to punch him in the face. Now, of course, we don't want you to go harm anybody, but
Yeah, well, and they compare it to a speculative investment, right? Because a
Right.
real investment pays you, right? If you want to compare it to, say, cash flowing real estate, certainly it's not the same as cash flowing real estate, but that actually gets interesting because a lot of the benefits of whole life insurance are very much analogous to cash flowing real estate. It's not the same, different asset classes, okay? But that's a cash flowing real estate is a real asset because it pays you, right? Robert Kiyosaki's definition of an asset is an asset puts money in your pocket every month, right? Whereas a liability takes money away from you every month, right? So if you're putting money into some Wall Street vehicle where they're promising you a return, well, you're not getting any income, right? At some point, if it's not generating income, then how's it really helping you? So I know we've gotten into a lot of different rabbit holes,
Yeah.
but
And let me just mention one thing real quick. Talking about Kiyosaki, because they do the free investing. I don't know if you ever seen those YouTube videos they do. He does one. Ray Dalio just did one. Ray Dalio is like a billionaire now, manages a lot of money, and he was talking about he thinks things are going to get really ugly in this country. And he kept on talking about diversification. And he didn't just mean diversification, just stocks and bonds. He talked about really being truly diversified. And if you really believe a lot of this bad stuff is coming down the road, there is no better way to diversify a portfolio than to have some cash value life insurance in it, right? So,
yep. So yes, the psychological benefit of certainty in your financial plan and how whole life insurance accomplishes it is something that is difficult to articulate and impossible to quantify. But I thought we would broach the topic here. So Peter, thanks so much for your time. We look forward to the next one.
God bless and Godspeed.